Hi folks, Chuck Gibson from Financial Perspectives in San Ramon, California with January 2017's Charts on the Move. Before I move on to the charts, I want to wish everyone a happy new year, albeit a month or so late. In this month's video, I have a lot of charts as I'm going to attempt to make the case we are in the midst of a strong risk-on environment. Regardless of the whys and the fact fundamentals are telling a different story and so many other logical arguments to the contrary, the fact is, investors across the globe are strongly bullish right here. Let's start the chart fest right here in the US with the S&P 500 index. You can see how price is well above its long-term uptrend line and it's above a rising 200-day moving average. It continues to push higher in every consolidation, including this backtest to support which occurred after the election breakout is being bought. In spite of Europe's immense problems, while not as strong as the US, their stock index is constructive as it has created a series of higher highs and higher lows and appears to be ready to break out above this bullish ascending triangle pattern. Okay, I do recognize England is a part of Europe, but I wanted to highlight their stock market because it is a picture of beauty. Remember Brexit and the calls for a crash in their economy and their market? Well, maybe their economy has crashed, but does this look like a picture of a stock market that's crashed? Price has broken out to all-time highs and is in the process of backtesting this support area. In addition, it's strongly above a rising 200-day moving average and has created a series of higher highs and higher lows. This is extremely bullish and looks like it wants to move much, much higher from here. My next chart is that of the Japanese stock market and shows prices broke out from this year-and-a-half downtrend, has moved higher, and is currently in the process of consolidating its recent gains. Price is again strongly higher than its rising 200-day moving average, and momentum is well into the bullish zone. While it has not yet exceeded recent highs, there is nothing hinting anything is in the way of letting it do so. After losing 35%, the emerging markets, which I have written about in numerous blog posts, bottomed last January and is up almost 40% since then. Like the charts that came before, price is above a rising 200-day moving average and has created higher highs and higher lows. In this case, price is currently retesting last year's highs. These are all very bullish signals, and there's nothing in this chart warning a reversal is imminent and to expect higher prices ahead. The most compelling thing about my next chart of India's Nifty 50 index is the fact that it's less than 3% away from taking out all-time highs. Sure, that level has acted as resistance in the past, and it gives us pause. But we also know that the more times price hits a level, the higher the probability it is that it will eventually break through. Will this time be the charm? Well, only time will tell, but a break above would be extremely bullish and make the case for owning a position in India's stock market. Next, the chart of an aggregate of Latin America's stock markets is probably my favorite of all. Price is held above a rising 200-day moving average and is just 2% away from a breakout to new 2-year highs. When you combine this with the fact that we are very close to breaking out of this inverse head and shoulders bullish reversal pattern, it tells me to expect higher prices in the future. What makes this chart so compelling is the fact that its upside target is almost 40% higher. As such, I'm patiently awaiting the breakout opportunity this beautiful setup is signaling. This broad-based Asian index too is telling a tale of risk on. Since bottoming at the beginning of last year, price has been choppy, but has stayed above this rising blue trend line and continues to stay above its rising 200-day moving average. With price being less than 2% away from last year's highs, a break above it points to target back up to the 2015 highs. Looking at one of the most hated and vilified countries in the world right now, well, at least by the media it seems, Russia has pierced above its 2015 highs. If the markets are ignoring this rhetoric and hate regarding Russia and pushes the price of its stock index above recent highs, that can't be interpreted as anything but bullish. While I've tried to include a sampling of most of the major stock markets around the globe, it's true, not every stock market is a screaming buy. For example, the chart of the Mexican Bolsa looks exactly the inverse of what I've been showing you above. After falling more than 40% from its 2013 highs, price has done nothing but create lower highs and lower lows, and has been consistently staying below a falling 200-day moving average. But these cases are few and far between, and in the case of Mexico, I think it shows the power of social media and the ability of our president's word to act as an economic club. But one day, like all beaten down investments, this too will become an investment with a huge upside potential. When is anyone's guess, but maybe it's after they're done paying for the wall. After looking across the global landscape and what investors are doing, hopefully you came to the same conclusion that I did, that stocks, at least for now, are the place to be. Of course, this could change tomorrow, as we are overdue for a short-term correction, we are overbought, and the fundamentals are flashing warning signs. Add to this the fact that Februaries are typically tough months for stocks. For the past 40 years, it's been the S&P 500's weakest month of the year, falling 2% on average following each election. Knowing the indexes have crept to new highs, partially based on analyst projection of a 12% profit growth in 2017, has me concerned, because we know their pattern is to predict higher at the start of the year, then lower the estimate as the year progresses. How will the markets take this year if earnings fall short, considering how much it's run up? Because the answer to these questions are all unknown, we must respect what the market is telling us right now, which is to be fully invested, and then react if and when it eventually changes its mind. Well, that's it for this month. I let you guys off easy and made it short. So, until next month, as always, I appreciate your time and your attention and hope you found this video informative and helpful. If you have any special requests for the next installment or comments, I'd love to hear from you. You could send me an email at chuck@financialperspectives.biz. Again, thanks for listening, and until next month, this has been Chuck Gibson from Financial Perspectives with January 2017's Charts on the Move.